Elections in Europe shake up the markets. Hello, Adam Hewison here, co-founder of MarketClub, and welcome all MarketClub members. Here's your midday market update for Monday, the 23rd of April. Well, as I said, the markets are under pressure. You can see basically on our S&P 500, you can see it down. The key level there is going to be this 1358. The potential exists here. I saw this morning. I wanted to share this with you. If we scope this in a little bit further, let's say a year, the potential exists that this could be a potential flag. Let me just show you how that works. The flag formation is something that goes into the existing, just take that off, we don't need that. It goes into the existing, it's drawn like that. So it comes down, drawn like that, and you measure down. If we measure down, this takes you to 1300, and then we put a Fibonacci number in there. We could certainly get an idea of where this potentially could happen on the downside. But 1358 is a very big number, and this is all, again, to do with Europe. And Europe is the key. And if we scope this in here, so that gets us in that 50% range pullback, which could definitely be an area that the market's going to find support in. So let's see how that plays out. I'm going to skip the other two markets because they're obviously under pressure as well. We'll look at very quickly. Let's just take a quick look at those markets. And going with the Dow Industrials, you can see that's under pressure, but that's got a further support here on the downside, right around the 12,700 level. 12,710 should be finding support, but not so bearish. The market is also, remember, our long-term and monthly trade trials are still positive on this market from this level as they are on the S&P 500. So we are looking for this market to actually improve longer term. Same way here, we've broken through on the S&P. Of course, this a lot has to do with this is the Nasdaq. A lot has to do with the Apple. The key level there on this market is going to be. Let's scope this in a little closer so you can all get a close look. Is going to be this level right here, and this level here is the 2,900 level, and we're 2,950. So, but this is not a good close, certainly not a good move for this market unless it retaliates and closes towards the highs, which I somehow doubt will happen today. But going to the next market, this is the interesting one on the silver. Silver really took a dive today. Remember, we said this market was going sideways, sideways, sideways. Something was going to happen here. Well, boom, it happened today. We moved down to as low as 30.52, now a 30.42, and let me write that on the screen so you'll get an idea. A 30.42 is a 61.8% Fibonacci retracement. So we're getting very close to that happening. We're also in a very oversold. Would I buy it here? No. I'd like to see some sort of consolidation beforehand. But remember, the longer-term monthly trade triangle is still positive on this market. So let's see how that plays out. And let's go to our next market, which is gold, which is also acting a little bit differently from the silver. So you're seeing some dynamics in the silver-gold ratio here that are quite interesting. And gold is down, of course, but it didn't take the kind of, we're just down, let's say, we're down 0.75% on gold, and so far we're down, let's see, 2.85% on silver. So you picked up 2% in that spread today. So let's see how that plays out. But generally speaking, it looks to us as though the gold market, just put a close-only chart on this, is just sort of meandering down. It hasn't really gone anywhere. It looked as though to us it was going to build this sort of head and shoulders base to go higher, but I'm not sure that's in the cards right now. But you can see basically on the bigger picture, and if we just put you can see how this market is really beginning to consolidate, and I think it's wanting to go higher. But here's the picture we looked at right here. And the question is, we need to take out this line right here, and that's really the 1800 line. But before that, you're looking at the 1700 line, and these are very important lines to look at, because once we go through these lines, and we may just do that type of thing on the upside, then I think we're starting to swing back up, and the distrust of paper money and what's going on in Europe. It could well kick in and offer some great, great trading opportunities. So let's clear the screen. Let's go to our next market. The next market is going to be copper. Copper is kind of like same way there. It's had the Fibonacci retracement. We put the, there we go. So you can see it's testing the lows around 3.58 with 3.62 now. but nonetheless, it's not a good day for copper. And it has mixed bunch, 55 trading range. So I think for the most part, we want to just see how that plays out. But generally speaking, the longer term trade triangle in copper is green, meaning the trend is longer term up. So crude oil, interesting day in crude oil. Let's just go here and let's take a look at this. Let me go to the next market because I really want to look at this market. Let's look at the USO because the main contract is off. But we're down, we're testing the lows again. Again, this is a very, very choppy market. No real direction. Boom, 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 one day. So, but we are in an oversold condition, which means if we take out the highs today, and the highs so far we've seen is 38.74, and we're currently trading, let me just give you a heads up on the currently trading level on that. And we're currently trading at 38.69. So we're very close to making new highs of 38.77. That's the number I would want to watch on the USO today. Oversold, yes. Very low volume on the pullback here. And also you've got a minus 70, which is a little more than a trading range, almost like an emerging trend. But this is the key level to look at on this stock is 38.31, which is about another $1.30 away from here. Actually make that, make that about 30 points from here. If it goes below there, that's not going to be a good sign for this market. So let's see how things play out in this market. But longer term, the monthly is still positive. So let's go to the Eurodollar. In the Eurodollar, we actually said the highs with this Fibonacci retracement. It stopped, reversed, came back down. I think this market's going to take out the 130 level, which we talked about as the line in the sand. And again, the line in the sand sort of starts right here at 130, and you can see how this market is just sort of moving over. And so 132 is resistance, and 130 is support. We need to go out of this range to get this market moving, and I think it's going to go on to the downside, down to about the 125 level. So that's the euro that we're looking at very carefully. So let's clear the screen, go to our next market. And the next market we're looking at is going to be the CRB Reuters Jefferies Index. Under a lot of pressure today. Looks like it wants to test the levels we saw back here in late December. And those levels were around about the 293, 294 level. So we may have a little bit more to go there. But again, we're in an oversold condition. It's a minus 100, so the trend is clearly on the downside. And I think that's going to be a real situation there. So let's see what happens, and let's see how we're working on this market as we come into the rest of the week. So it's early in the week. We have a lot of pressure coming in from Europe. We've got many of the sectors. One big sector today is healthcare, the stock ALMN. Let's take a quick look at that. I'm just going to go back to my portfolio manager. And to do that, I just simply click on the little X, close this spot out, and we'll put a new chart in. So let's see how we can get that. And let's just click on the stock ALMN. This stock is up about 12% in the healthcare sector. And nothing came out. That's strange. Okay. Well, let's take another look at another market that's actually up even higher in the utility market, ADGE. So let's put that in, ADGE. And it's right here, so let's just put that in. And you can see it's a plus 90. And there you go. That's good. You got a nice trend on the upside there. Again, all of our trade triangles are positive. Nice close today. We're up, as I say, we're up 3.48% right now. And it looks to me like we're going to see this market do better. Nice base. And if you just draw a line here, nice base, boom, nice base, boom. So what you like to see in any stock is a market that's basing. At least this is what I look for. And I'll show you what I mean by that. Is if we look at this market and we see this type of activity. So the market builds a base. We call these energy fields. This is no pun, but basically it takes a lot of energy to build this up, to push the market higher. And again, their little energy field, boom, up. So that's what you look for in the markets. And of course, you've got If we scope this out even closer, we can go a little further out. And you can just draw this bigger energy field in, which is right here, and just draw a straight line across there. So this market may have a lot more to go on the upside. So the stock is traded on the Amex. It's ADGE, American DG Energy Inc., and it looks like it's on its way. So, hey, this is Adam Hewison for Market Club. I'll be back tomorrow with a more detailed analysis of these markets. Have a great trading day and every success in the markets. Remember, stop losses are key to managing risk. So I'll see you tomorrow, same time, same place.